Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news again. And of course, the only man that brings us the weekly news is Mr. Nick Bendel. Hello, Nick.
Hello, Owen. Great to see you again.
Yes, great to see you as well. Nick, what's been up with you the past week? You've been busy getting
Oh,
some work done?
I'm not busy. I'm productive. I never
Oh,
tell you.
okay, sorry. Have you been productive, Nick, in getting some work done? Yeah.
I was extremely productive over the past week. If I could tell you everything I've done over the past week, we would need so many podcast episodes and we would break the internet. So I won't tell you everything, but I will tell you one very nice thing. I own a business called Hunter and Scribe, a copywriting agency that writes content for finance and property professionals throughout Australia. And we got a really nice 5-star Google review from a mortgage broker. By the way, we now have more than 150 5-star Google reviews, which is very nice. And
Well done.
this wonderful mortgage broker wrote, Clever Finance is a mortgage broking business that has built a strong reputation with property investors. To make sure we stay front of mind with investor clients, we publish regular blog content. Hunter and Scribe help us with this task. We select the topics and they write the articles, which are always done to a high standard.
Well, I can't disagree there, Nick. It's sounds like someone uses your services because that's how I would describe yourself.
Well, thank you, Ivan. That's very kind and very grateful to that particular broker client. It's been an absolute pleasure working with them for the past year or so, and that was very generous of them.
And actually, that reminds me, we've had some 5-star Google reviews lately come in, so I'll have to pull them out so I can quote them as well. So maybe for next week. But it's always good when you get some nice Google reviews. And so thank you for sharing that, Nick. And anything else that's been exciting in the past week?
No, nothing else comes to mind.
Okay, all right, no worries. Well, yeah, my week's been good too. We're looking at making another acquisition in terms of a rent roll acquisition, but we get bringing on new managements as well. Got another one in Adelaide. So if people don't know, we do work in Adelaide, and only just started there last year. So would like to get some more there. So I'm making a big deal of the fact that we got another new management in Adelaide, but we got heaps more in New South Wales, Queensland, and WA as well in the past month. But good to get another one in Adelaide. So anyone who's not happy with their property manager in Adelaide, please reach out. Or if you're buying investment property in Adelaide, please reach out, and would be great to be able to look after you. But maybe we should get into the news, Nick. Now that we've plugged myself and ourselves, it's yeah. Let's get into the news. What's happening this week?
Well, we've got 3 interesting stories today. The first one being investors returning to the market. There were a total of 49,065 investor home loans issued in the June quarter, which was 3.5% higher than the March quarter, according to the Australian Bureau of Statistics. Several factors are likely to have driven that surge in investor growth in the June quarter. There was an interest rate cut in May, following an earlier cut in February. National property prices resumed rising in February and have increased every month since. The national vacancy rate hovered between only 1.2 and 1.3% in the June quarter, and annual rent growth was about 4.5% in the June quarter, so rents were growing as well. Owen, which of those factors do you think would have played the main role in this rise in investor activity?
More the first two rather than the last two, which haven't really sort of changed much. So those first two being the interest rate cut, and with the prospects of more cuts to come, and then with the property prices resuming to rise. So that was sort of the end of the doom and gloom. Is the property market going to tank and drop in prices. So in essence, it's that level of confidence has come back into the market, and the rate cut with the prospect of more, which, as we know, has now happened, has helped with giving that confidence. So yeah.
We mentioned a few minutes ago that your property management business, Leifield, operates in 5 states. So have you noticed an increase in investor activity over the past few months? And if so, where has that increase been the greatest?
I mean, that's probably swayed more towards the referral groups that we have and relationships in terms of where we're seeing more business. But in general, the Melbourne market has improved in terms of the level of investment in the Melbourne market, but it's very slow to improve, and because everyone's very cautious. No one's excited to buy in Melbourne, but it's kind of like a no-brainer that you should be looking at it. But apart from that, Perth is still bubbling along quite healthily. It's certainly not booming like it was, say, 2 years ago. But yeah, the Sydney market, but probably more the surrounds of Sydney is still going well. So like the Central Coast, Newcastle, Hunter Valley region, it's still going strong. Prices are growing both on the purchase price as well as rentals, still growing at a healthy rate. There's a lot of demand, and the price point compared to buying in Sydney, yeah, it just makes sense. So those people who don't want to buy outside New South Wales, they want to still be close to Sydney. Yeah, it's a good choice for a lot of people. And Brisbane is still fairly healthy, going strong, but they've had a lot of growth. So it's you got to be careful where you're buying, and there's a bit of profit taking as well. There's a number of people wanting to sell in Brisbane, and not because it's a bad place to sell, but they might have owned property for a long time, and they'd seen experienced a lot of flatness in the market, and now they've got all this growth and gone woohoo, let's cash in. So yeah.
What's interesting, so we've talked about this increase in investor home loan activity, and I crunched the numbers, and I found out that the number of investor loans in the June quarter was 12.2% higher than the 5-year average. And we often see data points revert to the mean. So I'm wondering, Owen, does that mean there's not much scope for a further increase in investor activity?
I think it's still going to remain at these levels. And if and what we might find is there might be a longer term trend of investor activity versus owner occupied. And as we see more rent investors come into the market, and a lot of people wanting to take advantage of the property market rather than being in shares and so on, and a lot more people taking advantage of their super, putting it into direct property, and I think it's more a long-term trends that we're starting to see. So these higher levels of investor activity might be here to stay. So it might end up pushing that long-term mean, higher as we keep going along this trend.
So far, you've been very measured in your thoughts, but I know you love a good rant. So for our next story, I'm going to tee you up for a very nice rant. And our second story is Employers Association calls out weak productivity. The national unemployment rate fell from 4.3% in June to 4.2% in July. But Innes Willocks, the CEO of the Australian Industry Group, an employers association, was not impressed. Australia's low unemployment rate has created a blind spot to labour market trends that are decreasing our productivity, our wellspring to national wealth, he said. There are 4 key areas that are a material drag on productivity. Job creation has become almost entirely dependent on government spending. A growing regulatory burden has increased private sector costs. There is a persistent overhang of excess job vacancies, and mobility is declining. These are all making job creation more expensive and difficult, reducing the efficiency of matching jobs to employers while disrupting productivity and sapping business growth. To, to maintain steady unemployment and participation rates, the economy needs to create 400,000 new jobs every year. The private sector, which normally accounts for two-thirds of those positions, has collapsed since 2023 and last year created 53,000 new jobs, or one-fifth of what it should provide. Government sectors have taken up the slack, adding 670,000 jobs in the past 2 years, or 82% of the total. There is an urgent need to transition to the private sector resuming its role, or our labour market resilience will be at risk. Owen, for the past 3 years, as Innes Willox said, Australia has had very low unemployment by historical standards. So is it fair of him to be critical of the labour market?
Um, I think it is fair because we've seen especially federal government and go on this um, employment mass employment move to which has really taken up the slack in creating jobs. As we've talked about in the past, we've had this per capita recession that a lot of people have talked about, and you've brought it up with us before. And that's really because, yes, the private sector has been struggling with rising costs of not just materials, but also with employment. We've got it's hard to find good staff and to get them to stay. And so there's a lot of apathy out there in employment land where people uh, are really not sure whether their employment is safe, or they're always looking for the next best thing because they're having to the everyday person is having to deal with rising costs of living. So they're always looking at the next best thing. So it's hard for employers to try and invest in new staff
Mm.
and to grow their business when the staff that they got are always constantly looking for the next best thing instead of trying to be more productive in the job that they've got. So I guess that's where the productivity issue is coming into it, because people are unsure about their futures, because we've got an economy that, on the surface level, looks like it's going okay, but you know but that's only because it's been artificially being kept above water by the mass immigration and the mass employment by the federal government.
Okay, well, let's move on to solutions then. As Innes Willox pointed out, the private sector has been responsible for only 18% of the jobs that have been created over the past 2 years. So, Owen, what does the federal government need to do to encourage businesses to increase investment and therefore hiring?
Uh, that's a big question, Nick.
Mm.
It's and the answers are the government can do lots of things. It's the number one thing is to be able to um, make our economy stronger and more stable. It's how do they do that? It's like, well, firstly, we need to bring down the demand on a daily basis. And the number one way of doing that that can be easily done is to reduce the amount of immigration. Now, that's been already talked about and said that it's going to be done. Um, but we also need to make employment laws easier for employers to be able to shift and change and to be able to hire people. And also with training as well, traineeships to bring new people and younger people in. But there's also an uncertainty in the labour market about you know what they can do, where they can work. It's almost like do they want to work remote? Do they want to work hybrid? Do they want to go back to an office, completely? Do they need to go and do a trade? Because you look at how much, there's a shortage of trades, and you look at how much they're earning, and it's just like, well, why should I go get an office job when I can go get a trade and earn more? So there's a lot of uncertainty in the labour market, and I think it's due to the uncertainty caused during COVID, and then with the current state and federal governments making it more difficult for the private sector to compete in the labour market, because the government employers are really the main employer at the moment. And so the private sector is competing with government jobs. And if you had uncertainty as an employee out there looking for a job, what would you do? Go and work for a private company, or go get a government job that's nice and safe with government benefits? So, it's government needs to leave the employers to the job of employing in the private sector. Otherwise, they become the competition.
Okay, well, let's look at government spending. And we've often said on this podcast that the federal government needs to significantly reduce its spending. But Owen, given that government spending has been propping up the job market, wouldn't a significant reduction in spending lead to a significant rise in unemployment?
Quite possibly, but that's life. We go through economic ups and downs, and we can't shelter everyone from these ups and downs forever and a day. It's we're now at the point where half the population is reliant on the government at some level for their income. So who's going to be working to be generating the taxes to be paying for all of this in 10 or 20 years time? Is that percentage going to keep on increasing? So how do we are we just kicking the can down the road even further? And is it just the government keep on buying votes by keeping everyone happy in this utopian scenario? And otherwise, we don't know what real hard times are.
It's funny. I think your point that the government can't protect everyone all the time is right. I think the best way to protect people is to create a strong economy, or at least create the conditions for a strong economy. And when the economy has some structural problems, as I think ours does, you often need to take one step backwards before you take two steps forwards. And so I feel as though we do need to make some structural changes, and that is going to cause some short-term pain, and that will be bad for the people who suffer as a result, perhaps through losing their jobs. But I think in the long term, that can lead to higher rates of employment and higher real wages, and therefore more overall prosperity.
Yes. Well said. Sometimes we need to take that step back to take two steps forward.
Well, let's move on to our final story for today. KPMG upgrades housing market forecast. National house prices are set to climb faster than expected this year, with KPMG upgrading its 2025 forecast to 4.9% house price growth, up from 3.3% earlier this year, after interest rate cuts boosted buyer sentiment and activity. Adelaide and Darwin are tipped to lead the pack, each with 7% house price growth, followed by Perth, Sydney, and Melbourne at 5%, Brisbane at 4%, Hobart at 2%, and Canberra at 1%. In 2026, national house price growth is expected to ease to 4.5% as supply improves, population growth stabilizes, and affordability constraints weigh on demand. However, housing completions are expected to average just 160,000 new dwellings annually over the next 2 years, 30% below the level needed to meet national housing targets, meaning supply constraints will continue to underpin prices. Owen, over the year to July 2025, house prices rose 4.1% according to Cotality, and now KPMG has forecasted that annual house price growth will be 4.9% at the end of the year. How accurate does that forecast sound to you?
It from what we're seeing and the feedback we're getting as well, it seems fairly accurate. We're seeing reports of steady growth. Nothing too exciting, but everyone's positive and everyone is expecting growth. But certainly nothing like a double-digit growth. Which is a healthy place to be. We need prices to continue to grow, so that the prospect of new developments makes it worthwhile for builders and developers to take that risk to start developing more. Because the prices need to be up there to be able to recover those costs of building new ones.
Well, just to recap, KPMG has forecast that house prices will rise 4.9% this year, but only 4.5% next year. We've had 3 rate cuts so far in 2025, and there might be a 4th and even a 5th. So shouldn't that lead to a property boom next year?
I don't necessarily think so. It's I think we can say that we're all boomed out, and it's nice to just return back to some normal, mid single digit growth, and that's nice and predictable, and no one's getting too excited, and it's we're able to just sit back and relax for a little while, Nick. We don't have to be boom or bust. Let's be boring for a little while. It's so even with a couple of rate cuts, the rate cuts are just there to be able to bring an equilibrium back so that we've got some steady as we go figures, and it'll be nice to see.
Well, I noticed that KPMG believes Adelaide and Darwin are going to be the strongest markets this year. Does that sound right to you?
Yeah, it could be. I mean, Adelaide has had some boom years in the last number of years, but their price point is still healthy for anyone wanting to get in. And Darwin can have these sharp upturns, but they can be short-lived. So, by the time they've already made the news, it's probably too late. So it's I think it's just too small a market, and there are other regional markets in other states that are bigger and perform for longer but fly under the radar. It's just because Darwin's the capital of Northern Territory that it hits the news cycle like this. So But Adelaide, yes, I would think Adelaide's a good place to buy. Certainly not a bad place to buy. And yes, whether it gets 7%, 5%, it's you should be buying for the long term, regardless. So yes, in 10 years' time, Adelaide would have performed well as a place to invest.
Darwin's interesting, as you say. It can be a bit of boom and bust, a bit of boom and bust. Property prices recently set a new record in Darwin, but the previous peak was in 2014. So between 2014 and kind of 2025, or at least late 2024, prices kind of went backwards. And so for 10 years, it did nothing. Things are going well for Darwin right now in terms of property prices. I don't think we can call it a boom, but the growth is strong, and I'll be curious to see how long that lasts.
Yeah, you never know. It'll be exciting for a couple of weeks at least. Yeah.
Well, we both need a bit of excitement in our lives, and that was a really, really nice chat. Who knows how Darwin's going to be positioned come the end of the year or 12 months' time? Let's keep following it. And in the meantime, I hope you have a great week, Owen.
You too, Nick, and looking forward to seeing what's in the news next week.